Hi, this is Robert from Mr. Insurance. Welcome or welcome back to our life insurance series. Are you ready? We're almost wrapped up. We're going to dive into number 5. Benefits of owning life insurance while you're still alive. These are the best kept secrets for tax savings in Canada. Let's dive in and find out what they are. Grab your pens and paper. We're going to be talking about 3 benefits of using life insurance while you're still alive. Benefit number 1 is all the money that you put into the policy grows tax-free during your lifetime. Unlike an RSP, you get a little bit of a deduction for an RSP while putting money in, but when you take it out, if your money triples in growth, it could push you up 2 or 3 tax brackets, and you don't want to pay more tax, do you? So benefit number 1, your money grows tax-free. So before we get to number 2, we're just going to share also that growing money inside a life insurance policy almost exceeds buying a rental property. If you want more information on that, click the link below, rental property versus life insurance, and see the benefits of life insurance over a rental property for your first investment. So the second benefit of using life insurance while you're still alive is that it can be used as a collateral loan for buying rental properties, buying another investment, or just borrowing money for when you need it. Instead of an emergency fund, put your money into a life insurance policy. On top of benefit number 1, letting it grow tax-free, number 2, you can access that cash and take it out when you need it. It's your money, take it out when you want. Third benefit of using life insurance while you're still alive is that if you have children, you don't have to wait till they're 19 to start setting up a savings account. You can put money inside a life insurance policy and that money will grow tax-free. So when they do turn 20 or are ready to go to post-secondary, you don't have to worry about where the money's going to come from. You can withdraw that money tax-free, put them through their post-secondary education. The upside is if you're doing that as opposed to an RESP, if the children don't go to school and you're putting money into an RESP all those years, you have to pay that money back or roll the non-government portion into an RSP only if you have room. If you don't, you're going to be taxed on it. And just when you thought we were wrapped up, we have a bonus tip. If you're self-employed and you decide to incorporate or you have a corporation, you can roll your life insurance policy into the corporation if there's cash value in it. Number 1, you get a shareholder loan credit. When you put the policy into the company, you get that shareholder credit. Number 2, part of the premiums for the life insurance policy, if it's inside the company, could be structured so that it is tax deductible. It's only a portion of the policy. Third advantage of putting the money into your corporate insurance policy is that the capital gains tax is exempt because all of your retained earnings goes into the insurance policy, so that amount comes out tax-free upon your death for your family members. There's no capital gains tax on the growth of the shares. That's one way to shelter your money. And if you stick around, watch the bonus video we have coming up. We have an interview with a client who has practiced this strategy. We got this client incorporated. He's in British Columbia. After as a corporation, we saved him $30,000 annually on his $180,000 personal income by getting him incorporated, practicing the strategy. So let's watch the video now. The interview with Quentin Carlin in BC. So here we are. Thanks everybody for watching this 5-part series. We're coming to the end here. We just reviewed the benefits of owning a life insurance policy while you're still alive. And we have living proof on here with us today. Quentin, how you doing?
Doing very well, sir. Thanks for having me. Good to be here.
Awesome. So just to give our listeners a little bit of a background, we had a 4-part series that they probably watched already. If they skipped to the good part here at the end, then they missed out on a lot. But the 4 parts were talking about how to apply for a life insurance policy, different types of life insurance, living benefits, as well as full life insurance, the application process, what hoops do you have to jump through to get qualified. But the big end game is not to die. Is to enjoy the benefits of insurance while you're still alive. So Quentin, before we get into it, just a little bit about how we met, then we'll get into the business side.
Cool. Yeah. Well, I remember long ago when I was living in Vancouver, the brand Mr. Taxes. I would see it, or maybe even we might have met at a networking event at some point in Vancouver. I can't remember, but Mr. Taxes stood out to me. So when I moved back to Canada after 10 years abroad, I just put a post on, my social media saying, hey, does anybody know a good accountant for taxes here in Vancouver? And then our mutual friend said, hey, this guy, Mr. Taxes, Robert Stone, I've been working with him for years. He's the best. And someone else recommended someone else. So I was going to do my interview process. So I was calling a couple different offices, and you and I, we just hit it off. I was like, all right, you're my guy. And you've just became more than my accountant. We became very good friends. And I just want to thank you because I've learned a ton from you over the last couple of years, and happy to be a client and a friend.
Awesome. So we do work on the accounting side, but that's where the tax planning comes into play, utilizing corporate owned life insurance. So you weren't a corporation when you started your business venture. But before we get into that, a little bit about the sporting background, because I see the Bulls jersey in the back.
Yeah.
So just a little brief background to give people some perspective of where you came from and what you're doing after. We'll talk about the business side.
Yeah, no, it's hard to tell on Zoom sitting down here, but I'm actually 6'7". So I played basketball here in university in Canada. And then after that, I ended up playing in Asia briefly as well. So I was actually in Asia for quite a number of years. Yeah, still active, still play, love the sport. And yeah, I know that you have an athletic background with your boxing career. There's a couple pictures behind there I see of you. I find that people that do have an athletic background also do well in business, because the work ethic, the dedication, working with people, sports and business kind of goes hand in hand in my mind.
So business, for when we met, you were in business for yourself, contractor, selling online sales courses, etc. But what was the issue on the accounting side? Why did you reach out in the first place?
Yeah, so I work with a US company. We're just ranked in Forbes as one of the top 5,000 fastest growing companies. Actually, top, I think, fastest growing 1,500. But yeah, so things have been going very, very well. And so I get paid in US, and then I live here in Vancouver. So with the currency conversions, the tax side of things, wasn't sure what I could do tax wise and what that was going to look like. I reached out, we had a few meetings, and then you kind of shared with me the strategy using insurance and helping reduce and eliminate taxes on that. It's interesting because I heard that strategy over 10 years ago at a conference I went to down in Texas. They were talking about it, and it always made sense to me. And it's interesting that I might have even mentioned it to you, but I was like, hey, do you know anything about this? And you're like, actually, that's what we specialize in. I'm like, perfect. Let's roll.
That might have been what solidified the connection, because a lot of people that go into business, they start out as possibly a sole proprietor or with a spouse. Once your income starts going up, one of the first steps you have to do is think about incorporating. But at what stage do you do that? Those are some of the questions that we answer. But you were right at that point. You were at the point where you were paying an exorbitant amount of tax based on your income. You were in the highest tax bracket, actually. So the next step after that is utilizing the insurance tax strategy that we talked about. But it only really comes into play once you're incorporated. So incorporating, did it change the way you did business?
Nothing.
Change the way you sell? It's the exact same thing, except now you have that tax protection envelope. And that's really what this corporate tax strategy does. So you saw a big difference just incorporating the first year. What did that do for your personal income tax?
I don't remember the exact numbers, but it was a lot less, because the good thing is everyone wants to make more money. But when you are making a lot more, it kind of balances out because you're paying a lot more in taxes. So with this strategy, it allows you to stay up here, but keep your taxes down here. The one thing that really struck me, I can't remember exactly how you said it, but you said a lot of people are out there trying to chase 10% returns in investments or the stock market and stuff. But if you just simply are able to save 25% in taxes, that's the best investment ROI you can get.
20% gain with no risk. You don't have to put your neck out on the table.
Sure.
But one of the big ones was the screenshots that we shared, is that once you invest inside your corporation in BC, you go from 11% tax to 21%. So it almost doubles. It's about 190% increase in passive income. And then every $5,000 that your passive income goes up, it reduces the small business deductions. Then it doubles your tax again on the corporation. Like exactly like you said, if you're chasing an extra 1 or 2% in the markets, like I'm going to use mortgage investment corps. Now you can lend money out and get back 12% to 14%. Well, if you're looking for another mortgage investment corp and you're trying to get 15%, you're chasing 1%. But if you're paying 30% in tax, you just lost everything.
It's really just it's like a paradigm shift, right? Because people are programmed to just look at returns, what's coming in instead of what's going out, and trying to reduce what's going out. Right?
And a lot of people don't realize you can invest in the exact same funds inside your corporation, nestled inside your corporate owned insurance policy, save that 21% tax, number one. Number two, have part of the premiums tax deductible. And number three, pull all that money out in retirement tax free. So you're saving 3 different ways. You've experienced the first one after the first full year of being involved, and that preempted something. Now you're thinking of changing careers or adding another revenue stream to your career.
Yeah, I mean, I just look at it. I'm all about offering service and value and trying to give something to people that's actually going to make a big impact for them. And there's not much that can beat the ability to help people around this massive expense for most people and turn that expense into a positive. And on the personal side too, with the benefit, like imagine if I kind of look at this as just a bank account. Like I look at the insurance policy as a bank account. But what bank out there is going to pay your family potentially millions of dollars, not if, but when you die? And personally, I shared this with you before the call here. I just got a phone call that today, well, actually last night, my uncle passed away, right? He was a school teacher. Yeah, we talked about it before here. And you even asked, like, do you want to still continue with the call here? And I'm like, well, yeah, because I think this is important because it's actually timely to raise this real life reality to people that we're all on the clock here. Like nothing is guaranteed. And I think that that's a big reason why I am wanting to, look at helping people around this because it's the most difficult thing to go through, but it's way more difficult if the finances and the preparation isn't properly prepared for. And most people, it's not. One of my best friends I played basketball with in university, his father just instantly passed away. There's a lot of that going on these days. If you're kind of tuning into what's going on in the world right now, unfortunately. But his father just passed away, had a heart attack at Whistler Mountain. And he didn't have anything. He didn't have a will. He didn't have insurance, like anything set up. And here's his son, obviously traumatized from this shock. And then now picking up the pieces financially for what his father didn't plan for. Right.
It's one of the first things we look at when we start working with people on the tax side, because we're financial planners as well. So all that comes with our service. One of the first things we look at is getting a will. Second one is insurance. Some capacity, whether it's to cover a mortgage or a debt if you have small children. And most of us don't start thinking about it till we have children. I know I didn't personally. Didn't do that in our business. We didn't get our insurance licenses until 2005 or 6, somewhere around there. And now we have a broker. Now we're sharing the information with everyone.
Yeah. And just going back to that too, the fact that it is under one roof, like all the services that you provide, I think just at a bare minimum for people to get exposure to this kind of education. Like I'm going through the certification process and the licenses and stuff. And I'm like, I can't believe that they don't teach this stuff in schools, because how to prepare for, like you said, when you have a child, what should you do to protect them in case something, God forbid, happens to you?
For you, we've done these videos for absolutely no cost for people watching them because we believe everybody needs to know about this stuff.
The thing that I love about what you all do is just big on education, right? And it's just like a very slow process. There's no high pressure stuff. It's just very relaxed, showing you options, take it or leave it kind of deal. Like it's just a very smooth process where a lot of people that are in maybe this industry haven't had good experiences with other people that are more so the high pressure. Like my background's in sales myself. That's not my style. And ironically, because it's not my style, I've been consistently one of the top producers in my company the last couple of years, right? So
hence the big tax problem.
Yeah, exactly.
Yeah, so if you're in the Vancouver area or BC, Quentin will be licensed very soon. Probably by the time you're watching this online, he will be licensed before the end of 2022. We'll have your email and your contact info in the links below. So make sure and reach out to Quentin. If you have questions from the client side, by all means, reach out to him. If you're looking to get an application started, don't wait till somebody gets licensed to get an application, because if you still want to work with Quentin and you want to get an insurance policy right away, Quentin can be your agent. He just has to get that license. You're very close. I know you're getting close.
Yeah, I've knocked out 3 out of the 4 modules, and it's been awesome. Like even if I wasn't pursuing this as a business and career, I would be recommending people to just go through it and learn this stuff for themselves, right? Or have someone like yourself, do it for them. But if you are like myself and you, Robbie, we're all about learning and developing these skills. And to also too, like people that are in a similar role as me on an online business or doing sales online, people think that a corporation, like I was just talking to one friend of mine, and he said, oh, I'm not making enough to be incorporated yet, because people think that corporations have to be these massive conglomerates. they don't, like it's really a simple process to get that set up. It's literally just going through a government website to choose a business name that you want, right? Like just looking at a business name to register and then getting that file number, and then you're incorporated, and all of a sudden you just gave yourself a 20% bonus, basically.
A lot of people do it for different reasons, but it gives you credibility as well if you're in business. If you're looking at incorporating, reach out to us as well. We can tell you if it's the right time or not the right time, like, when you should incorporate, reasons why you should. We lay it all out. There's no pressure to incorporate. The only main reason that we work on is, if you're paying too much to the government and you really don't want to do that anymore, or conversely, if you want to keep giving money to the government, don't incorporate. Hey, it's your choice. Enjoy yourself. Insurance can add that protection, that ease your conscience, so to speak. But we can chat about all that. So thanks, Quentin, for coming on. Any last notes before we sign off?
My biggest thing is don't wait. Tomorrow never comes, and you never know what's going to come tomorrow. So the best thing you can do is just prepare and protect yourself and put yourself in the best position possible, so that not if, but when things happen, like these phone calls that I just got, it's not as bad as it could have been, right? My heart goes out to like my friend who just lost his dad, like just all the paperwork, the finances, no insurance, no will, all that stuff. Even myself, right? Like now I'm getting my will set up, because it's just things like you said, you don't really think about until these events happen.
Excellent advice. Thanks, Quentin, for being on. And remember to like, subscribe, and in the comments below, Quentin's contact info. We'll see everybody.
Thanks.
Thank you for tuning in to this 5-part series on everything you need to know about buying life insurance. If you like the tips that you heard here, tune in for our next videos.